Hi, everyone. Welcome to your latest Gate Pass Market Monday. I apologize in advance for any background noise as I'm sitting outside Future Proof in sunny California, which is one of the larger events in the wealth management space. But let's get right to it. Seasonal volatility is here to say the least. September started off with a lot of downside pressure, and then this past week reversed back to the upside. And as we have stated before, we expect volatility to be pretty persistent from now all the way through the election. And speaking of the election, we had presidential debates last week, and unfortunately, we didn't get much in the way of policies from either one of the candidates. So if you go back to 2016 and 2020, the market topped in August and then traded down all the way through the election because there was a lot of pre-election jitters. But once there's a new candidate elected and then uncertainty died down, November and December, the market rallied through the end of the year. So we expect a similar setup this year. And then probably most importantly, you cannot let your emotions get in front of politics, or that can cost you big time in your portfolio. And now looking out to this week, all eyes are going to be on the Fed meeting on Wednesday, where they're poised to cut interest rates. This is going to be the first time we've had an interest rate cut since 2020. So it's been some time since we had an interest rate cut. And the rationale for cutting rates is pretty simple, right? I mean, it's just a balancing of risks. And the Fed has really one of two mandates: to keep inflation very low and stable, and to manage unemployment risk. And right now, the Fed sees more upside risk to unemployment than they do in inflation. And so that's why they think now is the time to cut interest rates. And positively, the Fed has some wiggle room to work with. If you go back and just look at what the central tendency has been for the Fed, historically, they've been around that 4% mark on the higher end. And so right now we have about 150 basis points of wiggle room. So we think that leaves us pretty optimistic about where we are, because right now we're cutting rates more as a luxury than a necessity. So that gives the Fed a lot of wiggle room if they need to really accelerate the rate cuts going forward. And then lastly, these cuts should really boost the economy as well, right? So companies should get a nice boost from capital expenditures. And then when you look at the housing market, there's been a lot of pent up demand, with consumers been waiting on the sidelines to refi their mortgages. So as rates start to come down, we expect a lot of this pent up demand to be unlocked. And then the last probably important data point this week will be on Tuesday, when we get retail sales. And we think there actually could be some softness in this number, just given the fact that auto sales that was already were published were pretty weak. And then there could be some hangover from Amazon Prime Day that we had the month prior. So we could see some softness here. But at the end of the day, Wednesday's meeting is going to trump everything. So that's it for this week. Thanks for tuning in, and look forward to catching everybody next week. Have a great week.